Hey everybody, it's Damian Rhodes. Welcome to my channel. I'm going to do a primer today on something that everyone should do, especially if they own any asset in either the stock market or the cryptocurrency market. As you already know, I'm very heavily invested in cryptocurrencies. So the primer today will show you how to use charts on cryptocurrencies. I remind you to please buy my book, Cryptocurrency for Beginners, a fast guide to get you started. And you can get it on Amazon, you can download it on Kindle, or have it sent to you in paperback. So let's get started right away. I'm going to take you to Binance, where I have one of my accounts. So you go up to your exchange, and instead of going basic, you hit advanced. The advanced button takes you to the advanced chart. Takes a couple seconds to load, and currently I'm on Bitcoin right here. You want to make sure you're on candlesticks. I'll go into candlesticks on another day. So click the full screen button. So here you have a one-day chart on Bitcoin. It goes all the way back to early August to today, which is January 31st, 2018. As you can see, you have the high for Bitcoin, which was hit on 12/15 at 19,798. That was the day that everybody believed it was going to hit 20,000. I believe I heard it a million times. I did not believe it was going to hit 20,000. I said to a friend of mine, I think it'll go to 10 before it hits 20, but of course he did not want to listen to me. So let's get right into it. Right here you'll see a tool button. Click Tools and go to Fibonacci line and click on it. Now nothing seems to happen, but there is something happening. Take your mouse and put it right at the very top, and a line will appear and you'll see a button right here. Drag that button down until this 100% mark is horizontal with the low for the chart interval, which they always show you the low and the high for whatever interval you're on. If you're on a 1 week, it would show you the high and the low for 55 weeks. This is a day chart, so it shows you the low and the high for this interval that you're looking at. So now you've drawn a Fibonacci chart. What is a Fibonacci chart? Nobody knows why. Wall Street's been using it forever, but Fibonacci says that when a stock that's been in an uptrend, or a stock market, or a cryptocurrency, any asset, when an asset has been in an uptrend and breaks down, as all assets do, the trend always ends at some point. When an asset breaks down, it will retrace down to one of these lines. What I've learned in my experience, the longer the trend and the stronger the trend, the more likely it will hit 38, 50, 61%. What are those numbers? Technically, this is giving back gain that you made, that this asset made. And as you can see, 100%, well, if it goes down 100% from here, it would go and hit exactly where it was when it first started the uptrend. So yes, it is possible for an asset to give back 100% of all the gain it made from the low to the high. Why does this occur? Well, people start to sell. All trends end when people start to sell and are not accepting the price that's current and do not believe it's going to continue to go up, so they take profit. Profit taking is part of the game, and if you don't learn how to do it, you're going to leave a lot on the table. I can guarantee you, when Bitcoin hit this high on 12/15, if you were doing Fibonacci charts on Bitcoin and you knew someone that owned a bunch, and I do, and I told him I think it could go down to 11,000 to 9,000. I gave him a band. I don't know exactly where it's going to go. Who does? But I said it could go to 9 to 11,000. He laughed in my face. Why? Because he doesn't want it to go down. He wants it to continue to go up, as everybody who's holding wants it to continue to go up. But hope is not an investment strategy. You, as a good investor, realize that at some point people will start to sell for profit, and if there's more people who are willing to sell their asset than there are willing to buy it, the trend breaks. Now, the stronger the trend, typically the stronger the break. As you can see, Bitcoin went all the way down to its 61% line and bounced right off of it. See that right there? Bounced right off of it. It's amazing how often these things occur. I will show you on just this one chart how amazing it is. On the first break, it hit the 50% mark and bounced right up. That's resistance and support. That's support, and it rallied back up. Came down, hit support again, rallied back up, but when it finally broke down, why? Because it hit resistance at the 19% line. Once it hit resistance, people in the know, people who chart, started to sell. It sold off all the way down to the 61% line. It rallied and hit resistance at the 38% line. And now it looks to me like it's right back to 61%. People use Fibonacci charts who make a lot of money in the stock market and now the crypto markets. You are going up against these people. It is wise for you to use Fibonacci charts also.